Look, I'm recording this video after close of trade Friday, 16th of July 2010, and we had a monster down day today, closed down about 27.5 points. Just show you the daily chart of the E-mini here. This is our cyclical turning point, better sine wave. We had this on Thursday, kind of show that we've got a confirmed kind of cyclical turn, and that played out pretty hard on Friday with this big down bar. If I back it down to my lower time frame, the last video I did, I was just talking about how I was expecting an end of trend warning signal on the 45-minute chart. So if the daily chart's the highest time frame, the 45-minute chart's the lowest kind of corresponding time frame. And we had a pullback, and I was expecting a nice end of trend kind of signal this. I was thinking, well, maybe we'll push past 1100, hit a whole bunch of stops, and that'll give us our kind of exhaustion buying volume that'll signal a turn in the market. Well, the market didn't do that. It was so strong. The down move was, people just wanted to exit the market so quickly that we never saw that end of trend, and we've kind of punched through this pullback cyclical support level here. And with this, that means we're into a downtrend, and I would suggest maybe a fairly strong downtrend. I'm just going to pull up the better pro-am indicators on here just to show. There's our profit taking bar. This last bar at the close on the Thursday was pretty significant. It was a profit taking bar. We had a kind of a very weak close here, and we kind of were coming up to levels that previously had been tested with no demand patterns and so on. So we had that before and kind of punched through, had this kind of gap up to the next level. We had all of these no demand and profit taking patterns kind of taking place here, and then we pushed to the next level. That was obviously a bridge too far, and the market's just kind of corrected heavily since. Now, we did have quite a lot of exhaustion selling and professional bars at the end of the day, however, which means I think we're going to have some kind of a bounce on Monday, not early on Monday, but at some time during Monday we might have a little bit of a bounce. However, on the downside move, the next kind of logical target will be when the cyclical turn, the cyclical cross happens on the 135-minute chart. So I'd suggest that we're going to see weakness until that kind of kicks in, and then it's kind of critical going forward. We're at a really interesting point in the market. If we go back to this daily chart, we're making lower highs here. 1, 2, 3, 4. We couldn't push through 1100, and so the next kind of question is whether this support level down here at 1100 is going to hold. So that's going to be kind of critical going forward. On some of my other charts, we had a nice exit signal on the better Trin systems close of Friday. Now this will be actually executed on the open on Sunday, just because of the way this system works. But it would have been great if we'd taken profits right up to the top. But you've got to follow your signals. So we're out here, and that actually means, if I just pull up the strategy performance report, that we're actually making kind of record highs on the equity curve here, so it's great. And the performance of these systems continues to hold up. We've still got a fairly healthy profit factor here. Anyway, just looking at these kind of bigger markets, the big question is this now the beginning? We've seen this kind of rejection of this cyclical turn. Does this mean that there's kind of a bigger move afoot? Are all the kind of correlated markets starting to line up to say we're in trouble and the equity market is going down and down hard? And it's a little bit mixed at the moment. Certainly, this is a bond chart, just looking at a daily chart of the 30-year bond market here. We're just about to crack kind of new highs on the bond market. So, people are rushing to bonds, the safety of bonds. So that's, one kind of confirming indicator. The second market that's kind of leaning in that direction, at least, this is the copper market. So I was just talking a couple of, a week ago or so, just talking about how copper is kind of signaling turns in the market a few days earlier, and you can see here we had our cyclical turn in the copper market with a bearish divergence signal about for the beginning of this week, and this has started to kind of move on down. And this kind of critical level at $2.80, if we're going to breach that on this next kind of swing down is going to be a critical question. If I just back up on the monthly chart on copper, yes, we're in a downswing here. We're below a cyclical resistance level. And then when I look at the weekly chart, not this last week, but the previous week's activity was a amateur bar, up bar, suggesting that was kind of weak amateur buying going into there, and we kind of reversed on the downside here. So is this pullback in an uptrend level going to be breached? So this level kind of going forward is going to be key. If that gets breached, we're into a downtrend here. Copper being kind of a leading indicator of global growth, that'll be kind of a bad signal. On the flip side, if I look at crude, Just look at the daily chart on crude. We're just about to form a cyclical turn. We've had a little bit of weakness here in crude, but we've got a cyclical turn kind of lining up in the next couple of days. So let's see where that goes. And if I look at the monthly chart, yes, we're in a downtrend. And on the weekly chart, we're very close to this cyclical support level here. We did have kind of exhaustion selling at this point, but again, there's one of those amateur up bars, kind of very weak buying at this point. So again, if the 70 level on crude doesn't hold, that again kind of portends that there's going to be some global lack of confidence in growth and so on. And then just looking at the dollar chart, so we'd expect the dollar to be starting to rally. If everybody's rushing to the safety of US bonds and then US dollar, we'd expect those things to start going up. And yes, on Friday the dollar index did kind of creep back up, but not extremely significantly. And the thing that's worried me on the dollar chart is there's no kind of cyclical support levels that kind of start to correspond with this. So this is the daily chart, and we had a weak up bar. Then if we look at the weekly chart, this support level, yes, would be a technical level where we might start to see some buying kind of come into the dollar index, but nothing in terms of cyclical turns. And then if we look at the monthly chart, we're actually coming up to a monthly cyclical turn on the downside that we've kind of started to weaken here. So not necessarily seeing a huge amount of strength in the dollar index. So if we look at these bonds, yes, it's suggesting that there's a flight to safety. Copper, yes, lack of kind of global growth, and so equities are possibly in trouble. Crude coming up to a significant kind of a turning point, and if the $70 a barrel kind of holds or gets broken, will be a key determinant. And then on dollar index, not showing a huge amount of strength on dollar index. So all of these things aren't starting to line up perfectly to suggest that we're going to crack, the equities markets is going to crack hard. So and because of that, I'd say kind of early next week we might see a little bit of some strength kind of coming in, because there was quite a lot of damage done on Friday in terms of the excess selling and so on. So just looking at the highest time frame tick bar chart, the 40,500 tick bar chart, here we go. And I was saying this is very similar to the 45-minute chart. Again, there we go. There's our pullback level that just got kind of broken at the beginning of the day, and that ended up in a downtrend. And you can see the professional bars and the stopping volume. This is kind of classic. Going into these turning points, here's stopping volume. At each of these points, stopping volume all the way up, that led to little kind of declines as we go through, and then stopping. This last one here, this level up at 1100, couldn't get broken. We had no demand. Some amateur bars kind of trying to push up past 1100. Final professional bar here, some amateur bars at the top here, and then the market kind of slinks away. And the professionals have started to come back in at the close on Friday. But because we're now significantly below this cyclical support level here, we've broken into a downtrend. We need to see a pullback and an end of downtrend on this time frame before this I can call a stop to the downtrend that's been started by this move. So then last chart just to show you is on these trend days, they're quite difficult to trade trend days. We know that a few days in advance, if there's a lack of range and lack of volatility in the markets, that's setting us up for a range day. But getting into a range day and kind of playing the whole range day all the way down is pretty tricky. Set up for this on Friday. The kind of clue was we had exhaustion buying on the close on Thursday. We had some very weak activity during the overnight session. So this is the close on Thursday and the open on Friday. We had kind of very weak activity with all these bearish divergence signals here. Professionals kind of coming in quite early before the open, and then we had this significant cyclical support level that kind of got broken. As soon as that's broken, we do move into a downtrend, and we had a second one form later on in the day, and that got broken. Lower time frames, what you're looking for, again, here's this cyclical. When we have cyclical support levels lining up on higher time frames, and they both get broken at the same time, there's no kind of support to come in to hold the market going down. And what I look for in these time frames is tests back up to this cyclical support level, particularly with yellow amateur bars here suggesting weakness, and the market kind of sells off. So I'll just show you on the lowest time frame. So we had bearish divergence just up here, and then we came back to test with an amateur bar here, and then the next kind of amateur bar we see is on the turn there as we're kind of moving down. If you go to the 500 tip bar chart, it's a little clearer. So this is the first one just above that cyclical support level, and you can see a nice little Rambo, our friend the Rambo pattern here, potential reversal of an amateur breakout. We've got a bearish divergence. This move is being led by the amateurs. You can see these amateur yellow up bars and a Rambo pattern here coming into a cyclical turn. The market takes off.